Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this. I guess this week's. It's almost like this month. It's already over. This week's Nadex weekly charts and analysis. Um, Interesting week. It is chock full of news. There's so much stuff going on this week with interest rate hikes and everything else. It's one of those ones that provides just tremendous trading opportunity. And we started off the day today rather kind of muted, but things have picked up a little bit. And again, the next couple days are really kind of chock full. So we want to make sure that we get as much analysis in as we can today. And then again, any questions, go ahead and type them in the chat, and I'll do my best to take care of them from there. All right. So let's see if I can do this correctly. There we go. For those of you that are new that don't know who I am the president and CEO of a company called Keep Trading Simple. I've been working with Nadex now for, I don't know, I want to say like 4 years. The years have kind of all blended together. So I think it's like 4 years now. But anyway, I've done articles for them, live presentations, and these analysis sessions are some of my favorite ones. Just because I can really dive into the charts and interact with you guys, more so than during one of the education events. I've been trading since about 1999, so it's been over 20 years. It sounds horrible when I say it like that because, yeah, it makes me sound really old, and I don't feel it. I'm that old, but definitely it makes me older than I feel. Love Nadex. I think Nadex is a great way to trade, particularly for beginners out there. But when you understand kind of the benefits of what it offers, even for experienced traders, it's definitely another arrow for your quiver. Create a number of different strategies that you can use both for Nadex in particular, but also external. I spent a couple years, basically about a year and a half, 2 years inside of one of the advisor divisions of one of the big three banks, and realized that it was totally different than what I thought. And my passion has always been in teaching, so I kind of left that industry and came back out to teach. I did spend about 6 years traveling around the U.S. and Canada, doing kind of basically seminars and teaching people during classes, and actually had the opportunity to be stationed in a basically in an office right down the street from the New York Stock Exchange. I lived literally, I could throw a baseball to the New York Stock Exchange. I used to walk past it every single morning. So being in the financial district in New York City is awesome. Currently, right now, I don't live in New York. I actually live in Maryland. So we are under kind of a freeze, but today's the first day in like, I don't know, 7 days, 10 days, something like that, that it's actually gone above freezing. So it's kind of a cool day out. It's like, yes, that cools in. It's not below freezing. We have powder everywhere. It's like, this is Maryland. We don't have powder here. So yeah, lots going on. With that, let's go right into kind of the Nadex risk disclaimer for today. Everybody knows that trading on Nadex, as well as everywhere else, involves risk and may not be appropriate for everyone. Members risk losing the cost to end of their transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility at your own risk. Now, past performance is not necessarily indicative of future results, and none of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and it is a registered trademark of the IG Group. Um, you guys know that there was a bid made, and Crypto.com has purchased Nadex. That's not quite here yet. When that is here, though, we will definitely update you guys, and hopefully we'll have some really cool things coming down the pipe. Um, the agenda for today, what we're going to cover, obviously, upcoming news events is going to be the most important. As you guys know, news is such an amazing catalyst. We know weeks in advance when these trade setups are going to be, whether it's early morning, regular U.S. hours, or even at night. There's just so many opportunities out there. So it's definitely something we want to take advantage of. We'll look to see what are the big hot events for the rest of the week. There's definitely some big ones on Thursday, as well as Friday being non-farm. It's considered one of the biggest news releases that exists. And then we'll dive into indices, and we'll go to forex, and we will go into commodities and kind of roll through it from there. Let's go across and get right into the news for the week. So let me see. Let's go. I'm already jumping ahead. All right. So here's what we have today. Obviously, we had some GDP, which is always a big number, better than expected for Canada. We had ISM manufacturing, came in more or less right as expected, but the JOLTS number came in much, much higher. A lot more job openings out there than that there was predicted, as well as there was an adjustment up in the previous reading. So that's always a good thing for the economy. Later on today, we have New Zealand unemployment change, right? Unemployment rate. And then we have Governor Lowe speaking now. Australia is at a stage where has not discussed OPEC plus. Yeah, looks like that's they're already starting to come in here. I'll bring that up in 1 second, but it's just funny that that's there. But Governor Lowe is speaking. Australia is definitely in a very cool situation right now. They haven't raised yet, but I mean, all the signs are there. So it's gonna, every country's basically at the same stage where we're in the process of raising. The pound is supposed to raise later on this week, but Australia, I'm looking for hawkish comments. I think there's a lot more buying opportunity in Australia. You can see it's already up 44 versus the dollar right now. So some great opportunity, particularly at night when you have these speeches. Tomorrow we have the OPEC JMMC meeting, basically the OPEC plus people. So why I'm laughing at that is because you can see right over here, OPEC plus JTC has not discussed the output hike of more than this. It's kind of funny. Um, I mentioned that earlier that Russia is a large member of the OPEC plus kind of not caucus, but um, they're a big factor, right? Obviously, you see if this just came through breaking, right? The U.S. could drag Russia into war with aiming of imposing sanctions at Moscow. I mean, everybody right now, Europe is unified. There's a story out here where, basically Europe is unified against Russia. Everybody is preparing a hefty sanctions package. Russia's response last week was, okay, go ahead, put sanctions on us. We'll allow crypto here and we'll bypass all your sanctions. But remember, they also kind of control, have a little bit of sway in the world right now with the price of oil, which is, almost at $90. So it's interesting to say, yeah, we haven't discussed, output hikes. Why would we do that? Everything is happening exactly how we thought. And again, they could use their own. It's funny. They could say, well, the Ukraine situation is a reason why we would not raise it. Okay, that's perfect. But at the same time, they will also profit from it. So it's funny they said, yeah, we haven't talked about raising this one, even though oil prices are skyrocketing. We haven't talked about it. So very, very funny that that's coming through. But tomorrow, again, we have those meetings all day. We'll see lots of headlines tomorrow. We'll see the ADP non-farm change. Again, this number was absolutely huge last time at 807. This time it's expected to be 175, maybe a little too negative, right? A little too negative, so we could provide a nice bounce for indices. Crude oil inventories tomorrow expected to be a surplus yet again, right? It was a surplus last week. It's not as high, but it's still a positive figure, right? It's still a surplus, but that doesn't seem like that affects the markets too much, right? And then we have Macklin speaking. You may say, who the heck is Macklin? Well, Macklin is the head guy in Canada, right? He's the head Canadian as far as interest rates go, right? So again, a big guy talking, raising interest rates. And you can see that the dollar CAD right now is about flat, but this is the signal. And I think, again, Canada's GDP numbers today were better than expected. There's every reason for them to start raising interest rates as well. Could provide some great opportunity, as well as that's piggybacked on top of oil, right? Oil prices go up, Canadian dollar strengthens from it as a proxy. And then we talk about them raising interest rates. Could be some great opportunity in the dollar CAD. The third, yes, there is a lot of things. I actually got to scroll down on this one. Thursday, there's a lot going on. My favorite part about Thursday is the fact that the news releases don't start until 7 a.m. Eastern time. Normally, when we're dealing with the pound and the euro, we're dealing with 3 o'clock in the morning news releases. Is it tradable? Absolutely. It's an amazing session, but as an East Coaster, it's not something that I really love to do. I mean, I do have a 4-month-old, so, there are a lot of times that I am, sort of up at that time, but actually getting up to focus and then, getting on charts at 3 o'clock in the morning is a little bit harder. When it's 7 a.m., game on. Now, pound right now, you guys can see it right here. The pound is already expected to raise another quarter percentage point. They've already done it once. Now they're looking to do it again to control inflation because, again, rising inflation is a bad thing. So already looking at one interest rate change. We also, right after that, that's at 7. At 7:45, we have the EU coming in. All right. Now, I think the EU is setting up to be a very, very interesting trade. It's not expected right now. I mean, again, the pound was a surprise last time going up to 0.25. The UK, the euro's a little bit behind. Statements like this about, hey, we're prepared to do hefty sanctions. We know that it's going to have an impact on the economy, but everybody's on board. This kind of sets up an interesting statement because everybody would expect them to start raising, or if they don't raise, signal, hey, listen, next meeting, we are raising, which is basically the same as actually doing it, right? If they start to use that, current situation as an excuse to not raise yet, and I say yet because they absolutely will this year, but yet, that could be a big selling opportunity in the euro. Euro dollar down, euro pound down, euro yen down. So a lot of different trading opportunities that will exist in that one. All right. So I like how that one's starting to unfold. And then we have the press conference, and then bam, we go right into unemployment claims. Expected to also be down, but again, a lot of this will be foreshadowed by the ADP numbers. And then ISM services. Now, services is a little bit lower. We had the manufacturing data here, right here, right? And that came in more or less as expected today. So we'll see what that looks like on Thursday. But again, it is at 10 o'clock. It could provide reversals in the indices on Thursday afternoon. So you got to love that. And then again, an RBA monetary policy statement. What does the additional raises look like this year? Where's inflation? Again, some more trading opportunity late Thursday. And then Friday, bam, we go our 8:30 non-farm payroll. United States unemployment rate is not changing. But again, that's not really like a real figure. But again, you can see 199. It was not as high as the ADP figures. It's 147. We'll see. And then average hourly earnings are not going up as much, right? But then we have Canadian data. Canadian data is expected to be pretty negative, right? Employment chains losing 111,000 jobs, unemployment rate going from 5.9 to 6.3. They just had a GDP that was better than expected. So could these be a little bit overly negative? Potentially, right? Which would set up a positive kind of pro CAD trade. So again, that would be dollar CAD down or even CAD yen for the other currency, currency people out there. Those could be interesting CAD based trades if this number comes in as being overly too negative. So, again, I like the prospects this week. And if I go back and again, I'll go to today just so you guys can get a good reading of it. This is what the week looks like. Look at all the red things. And again, a lot of them, like this is all basically the same pound thing. They're saying different things, but there's a lot of them. US, CAD over here. We have US, we have Euro, we have pound over here, we have CAD, we have US, we have Euro, right? Aussie, New Zealand, dollar, CAD. I mean, there's a lot of releases out there. This is a very, very big week for news releases. So a lot of catalysts, a lot of new trading setups. Again, for options traders out there, these are the weeks we live for because, again, having that limited risk going in, if we are completely wrong, it goes against us. It doesn't cost us anything. Futures traders for this week, maybe have a little bit more of an issue because, again, a lot of these news releases provide opportunities for gaps, and that's something that you kind of want to watch out for. All right. Um, yeah, the cartel comes to mind. Yeah, it's funny that you say that. Yeah, yeah, but that's basically what OPEC is. It's a cartel. They don't even control a majority of the oil production in the world, but yet they have such a sway because the United States has backed away from, again, the issues we have right now with oil, and again, seeing oil as high as it is, a lot of it was started because of the pipeline. And now we are begging them to produce more oil for us when we could have controlled the situation and we should have $60 oil, but we have almost, where is it? Almost $88, 87, 88. Let's go ahead and start with the indices. And I always like to start off with the VIX. So for those of you that attended the morning show, Todd and I do a morning show every day, Monday through Friday. I shouldn't say every day, but Monday through Friday, 8:45 to 9 a.m. in the morning to kind of see what's hot and see where some trading opportunities are. Yesterday we talked about the VIX having no real news, should decline, and it did. A huge decline yesterday. Today we're starting to see the same thing. I don't know if you saw it. Maybe the VIX will go higher today. It's official. Tom Brady is out. Yep, I'm shocked that Tom Brady retired before June. He had millions of reasons why to stay. Tom Brady has no money problems. I think he's good whether he stayed to June or didn't stay. But Tom Brady is officially out. So maybe that will raise the VIX. Maybe that was what the spike was. But Tom is out. He's done. Opening the door for other people. VIX continuing to drop down, and none of the news thus far today is really a big deal. Now, I would expect it to spike a little bit tomorrow with that ADP number as well as the ADP non-farm change and OPEC a little bit. But for right now, continuing to drop to the downside. And again, this dropping, the indices are basically all flat. Russell's up a little bit because, again, no real news, but YM, it's down 0.01%. And ES, 0.03%. So they're basically flat on the day. So there's really not much, to say with it. Yesterday we talked about buying opportunities in the ES. And again, I'll drop this down to a 15-minute. That's how we analyze the indices. And we talked about, if we were able to break through, we more or less had a clear run up top. We would obviously need a little bit of positive news, a little bit of run, right? We ended up getting the breakthrough, and it came back, and it's higher. It's about a 1-to-1, 1.5-to-1, probably up over that level. Haven't really gotten a big push, but there's also, if you think about it, what is the catalyst right now to drive it, right? We don't really have much. We still need some news. So the ADP news tomorrow, that could be the catalyst we need to drive higher right now. I mean, if nothing, like I said, Russia has become kind of like a non-issue. Like they send troops, we say we're going to support, don't cross. If one person crosses, we're going. They're like, hey, you're making the situation worse. It's like, no, your 100,000 troops made it worse. Tell them to go back home, and obviously that would de-escalate. And then We said serious sanctions, and then Russell's response is, "Hey, we need to get serious about having a talk." I'm like, I'm pretty sure we were serious before, and now all of Europe is allied against them. So, and said, "We'll take the brunt of whatever you throw at us at this point. We will put such a bad sanctions against you." So I don't know. We'll see where it goes. I mean, nobody's crossed. I don't think they're crossing. Um, who knows? That's the only kind of problem that we have out there. But besides that, we know inflation is being taken care of. Earnings have looked pretty good. Tech companies getting it a little bit worse. And again, we've had such a rally in the NQ. It's the weakest, but now we have 3 out of the 4 slightly in the green for the day. So I would say this one continues to roll higher. Not much else we can do for it. I would say a level to watch out for later in the week. And again, we can definitely get some bad news later in this week with everything we have going on. But 45.84 is a level where the last time price was there, had a pretty hefty push to the downside. So, for the S&P 500 people out there, just watch that. We got plenty of room to run. If you're long, it would definitely be a target first, but look for an area for that one if it comes up and potentially hits. And like I said, some of the ADP numbers are out there, the ISM services data, and then obviously non-farm payroll. That's obviously one that could definitely turn tank and roll the market down. Um, it's there, but besides that, there's not really a whole lot stopping. I wouldn't be looking for any more sell opportunities. As far as looking for shorts, I mean, like I said, this level's held pretty well. It has pushed a little bit deeper, so it's definitely not as strong. But even right below it, if it can break a little bit lower, there are buyers right below as well. So, not as much that we need to really watch out for. Um, looking across over at, whoops, I hit a button and lost the screen. There we go. All right, perfectly. There we go. We're back. Um, God, I hate when that happens. NQ is down, but barely 0.08%. As you can see, it started at 930. It took a big tank. It basically. This is funny. Pushed up, literally opened up at a high point, and again on a 15-minute chart, you should have absolutely been looking for shorts on this one. I always talk about a 15-minute trading strategy. Open. This was a perfect setup. It literally rolled in there, held there, and again, nice short down. This is what's called a bear trap. Okay, it blew through the Globex lows, right, the overnight lows, and people were like, "That's it, sell, sell, sell," just enough to find buyers, and then pushed back up again. So, you know, at this point, it's kind of the same scenario where we're at right now. We know we obviously got sellers, but it's hit it again. It's just hit it a third time. There's nothing clear over here, and we knew that the 78.6 was going to be a level that we needed to watch out for. At this point, if it goes much more, I mean, remember the 78.6, by the way. I don't know if you can see this or not. It's kind of overlaid, but the 78.6, you can see there's a black line there. That black line just happens to be 15,000. Okay. 15,000 is a big psychological number. It's one of those things. It's always going to be a level, both on the top and the bottom, because it's kind of like if it's below, great. If it's above, hey, off to the races. And I would say that that's a great level. Seeing the basing here, what it's probably doing is it's starting to build orders. These sellers will eventually become buyers, and that's what they're going to need to do to accumulate to punch through 15,000. But if we can't break through 15,000, again, that's what this black line is. If we can break through 15,000, here's the price action that we're dealing with, right? There's barely any pullbacks until we get back all the way up top of this red. And that red figure comes in at approximately 15,249. We can just round it up to 15,250 because that's more of a psychological number. Um, yeah, I think that one's decent. I mean, I think tomorrow with ADP non-farm or the ADP data, that could absolutely send us even higher. We need to get this last little bit through and then use this as our accumulation level going higher. So like I said, 15,000 I knew was going to be a big one to go through, but we've had two hits. We've actually had a third now. The next punch through, I think we'll be able to kind of make it through the top. And again, NQ is the weakest. It's almost green. It's down 0.01%. Right? 0.01%. It's down 1.75 points for the day. So we'll see. YM. YM is also chopping back on a large psychological level. And it's funny, if you look at all the indices right now, ES is at just over, it's 45,007. So it's just over 45,000. NQ sitting right at 14,900. We're sitting right there at 15,000, which is within striking distance. YM, we're sitting right on the 35,000 level. Right? Again, all large psychological numbers with zeros behind it. Now, this one's a little bit choppy. Of the three so far, this one has some buyers pushing it a bit higher. And again, we talked about this Harry Potter breaking through 35,794 on yesterday morning's morning show. It came up, it did the Harry Potter play up, base, pullback right into that level of risk, and continued up. And I mentioned 35,000 was going to be the issue. Hit 35,000, came back, hit it again, went through, hit it again, and now we're just running along it. Looking at price action, this one's a little different in that we do have this little zone, this little pullback sitting right there. And that's kind of what the linchpin has been. We do have a little bit more of a clear run if we can break through the top, at least up until 35,360, or what is it? I'm sorry, 35,350 ish right here. But again, that's another 300 points of the top side that's you're able to capture. And I'll bring this right across just so everybody can see kind of what the sticking issue has been. And you can see, look at this, it comes right in. It can't even break out of it, and it pulls back. It goes in again, stuck its head out, hammered back down again. This time it didn't even go through. So, you know, a predictable play. We mentioned going long yesterday from it. Right now, I would say it looks like it wants to pull back a little bit more. We do have three consecutive lower highs. The lows are not really low either, so it's more of a consolidation during a lunchtime period. But I do like YM, and I think YM will definitely be a mover tomorrow morning. It does actually have exposure to the ADP number. Again, it's a very broad. The ADP number is it basically deals with payrolls. YM is typically associated with manufacturing and industry jobs. Again, a lot of those payrolls are done by ADP, so it's a good reading over there. It should definitely it should definitely have some it should be affected by that number more so than some of the others. Now, Russell's the third one. Russell is up the most today, but you can see it's pretty choppy. I mean, 9:30 it did the same exact trap. When you're looking at the overnights, you can see that kind of here's the overnight. You know, looking at this one, you're like, well, whoops. There's the overnight. There's the overnight. Let's trap them. Right here's the trap. There's your 9:30 trap. It went right above. What did we do? Everybody goes, oh, we broke Globex highs. Ding. Oh, we got at the bottom. Short. Ding. Back up again. So you can see how we really haven't had much movement. It's literally been just traps back and forth. And we knew we had some sellers up top, but it wasn't really a great zone. So I mean, it's turning. It's turning. Um, I would say right now with this one being up the most today, I mean, looking at this, finding the buyers here, probably more of a rollback. I see it being more of a flat day. There's just no headlines today to drive this one. It's nice to know that there's a confirmation that we do have sellers up top here. If we did want to draw a zone, we could potentially draw it here and say, hey, listen, there's a zone. We had it peak up, and we know that we ran into sellers that could be a level for maybe this afternoon for a little bit of a retracement back again. Again, it's lunchtime. There's not a lot of volume right now. It's kind of slowing down. I'm trying to see, is there any. I don't really have much else today. It would be more of kind of a headline risk. I'm shocked. No, I'm not shocked. Crashes. Nah, there's not really a whole lot there that can provide opportunity. So, if anything, I would say probably a bit more down. Breaking through the top side of this one though, and this is one I want to throw an alert on. If you see where this is, right, and actually here I'll just put this on here because I already know I want to put one in there. It'll be a break of that. If you look above this line, you can see that we really don't have a whole lot of pullbacks until we get all the way back up into the basically close to 2100, right? 2095, right? So this is one of those ones that I love the base. I know that I got sellers here, but those sellers won't last forever. I want to know when that comes through, and I'm going to set this one up and say this is a Russell RTY breakout, and there we go. Have that one set, and probably what I'm going to be looking for is a long position out of the top side of this one. And again, it may not hit today. Like I said, it may just continue to roll back down again. It probably should on a purely technical analysis based level. But if it can get any catalyst to drive this market higher, again, January bad, right? Oh my God, we're getting all these lows again. Again, starting off February on a little bit of a high as people, kind of get away from that negativity. Wouldn't be surprised, but if we come up in base, that's where we're looking to go long this one. And it's got a decent runner. We got plenty of room. Look at this. We got all the way up top. And that puts us up at targets sitting up here at 2070, right? 2070 is your target to the top side on that one. So not a bad little trade setup. Looking at two of the big players out there right now, Apple, you can see Apple. I'm going to go back up to a 30 minutes just to do the analysis on this one. Obviously, Nadex, you're not trading Apple, but Apple and Tesla have big inroads into the NQ and what it's doing. Again, it is the weakest. But you can see there was a big level here. Again, this was a nice little shelf and drop. That's what Apple started the day with and ran off of. So Apple will probably be the linchpin for the NQ. Again, we'll see if it pulls back. Tesla, kind of the same thing. There was an area of sellers. There was a little bit of a gap and a very strong push down. And that's exactly what it's having problems going through right now. So if those two continue to roll, again, NQ is now green. It is officially green. But again, it's got to be able to break through with Apple and Tesla the way that they are. It's going to need some help. If those two can turn positive, that's what we're going to need for the accumulation level to break up to 15,000. So, all right. Let's go into currencies because currencies have been quite busy. So here's a level we talked about in today's, actually, I guess we talked about it yesterday. Yeah, we talked about the dollar Swiss this morning. So this was a trade we had set up from yesterday. Again, there's some fibs on here if you guys are wondering where this color is. Again, these are just fibs. I use fibs as a secondary. I don't use them as a primary analysis method. Again, if you do any research and learn how to trade fibs from people that actually are, CMTs and things like that, Fibonacci is supposed to be a confirmation method, not a primary method. I know people that use it as a primary. I use it as a confirmation into my own, the strategy that I use. And again, my students, they love calling it the golden ratio or the golden trade setup because again, they have great results with it. The one that we tend to use the most, and which I think is easiest for most new traders, is the 50%. Whenever I have a supply zone and a 50% lining up, I tend to like those trades a lot. So taking last week's high to low, you can see the 50% is kind of smack dead right in the middle of a supply zone for me. It was an area where we had a drop, a little bit of a pullback, and then a slam down again. So there's typically some sellers there. We have run into them. We've pulled back a little bit already. If I move this across, you can see to here. It looks like it was at a 1 to 1.3 already. So it's already been pretty decent. Again, it's still positive. There's your 1 to 3. It's going back to a pretty decent place there. But that trade is already initiated, so it's kind of a little bit late to get in right now. And we'll see if that's going to be the buyers holding this one back. But, pretty much at this point, it should be more or less a free trade for you. But as it's pulled back, I kind of like that one. The next level on the top, if we do break it, the next level I like up top, and this one has really technically been pushed to the kind of the breach, but it had such a strong response off of it. Actually, I'll probably adjust this a little bit. Let me bring this up. I'm going to change it to there. That still covers those two sides. Oops. I want to move that one. I want to move this price one right here. 71.78 would be the next area I'd be looking for this. And again, a lot of dollar news this week. The ADP non-farm data. We have everything going on. And again, we got some Australian data on Thursday, and then obviously standard non-farm on Friday. So a lot of stuff in here. If either of those numbers blows it out, which when I say blow it out, I mean being more than expected, and I think they absolutely could be. That would definitely bring some dollar strength back in and shoot this to the downside. So, again, we have this one that's current right now, and then again, I think there's another one up top. As far as buying opportunities, I don't really have a lot that I've probably all the way down here. There's a small little level right here, but it's been hit 3 times, so I'm not super focused on it. My next kind of what I would consider a high quality buy would be all the way down here at 69.75. All right, you got to see where that one labels out. And again, if you want to trade setups like this, this is one of those things that we kind of uncovered in the morning session. So make sure, if you're around, attend those. Also, yen, we talked about kind of being in the same scenario. There was a couple levels in here. There's a level right there. You saw this kind of smash down at 9:30 this morning, right? We had kind of this big spike here from yesterday afternoon back up again. It's basically, it's running off the same thing. It hit here. It's going through the same level again. They're both kind of set up in the same short. We were actually hoping this one got up into the 82.18. I'm sorry, the 82.15 range. We were looking for a short, but we wanted to go a bit higher, and it had a little bit of a pullback yesterday. So again, tested level, right? There's your confirmation. So it's a decent short. Aussie dollar, Aussie yen are more or less the same trade setup at this point. But we were waiting for a level a bit higher, and we do have an alert set on that one. So we want to make sure that we keep access to that. Euro pound. Euro pound, we were looking for something. We were waiting for it to come up. We were trying to be a bit more conservative, and it just didn't get up to where we needed it to be. We had talked about a basing level and 2 small touches, but really didn't breach it much up at this yellow level right here. It was just past the 50. The reason why we were setting this one up is because a lot of people use the 50 as your entry and 61.8 is your stop loss. Why take that entire level if we can take just a small one where we have confirmed sellers coming in? Don't take twice the risk. Unfortunately, it kind of left without us. It ran into some of these sellers, not really clean zones. And again, you can see that where are we at? European session started here, and they just started to drive this one down. And some of these comments came from this. 350. This was like, hey, listen, we're going to take it on the chops. Like we're unified against Russia. Everybody agrees, but we know it's going to hurt our economy. Right. This came out at 350 this morning. Not coincidental. When you look at this one, 350 is right here. Right here, 3 o'clock, 3:30, 3:50, and then just boom, it collapsed. So one of those things, you just got to watch out for it. We like to get short. I would say the next buying opportunity would be 83.09. The thing about this 83.09 level is you can see that it's hit it a few times. Okay, we've hit it here pretty decently. It pushed it to the brink again. This one going down is pound strength. Okay. I would kind of like to see where we are on Thursday for this one. I think this is an important one to watch. Know that this does not move as much as the euro dollar, pound dollar, or euro yen, right? But if we can get some basing, and what do I mean by basing is if we can get some basing in this level right here, let me turn this black. Um, if we can get some basing down in that level, we know this tested. Buyer stopped it here, buyer stopped it here, but they're going to run out. As you guys know, a lot of times these buyers will start, they'll basically flip sides once they're gone completely, then they'll start using it as a sell. I'm kind of looking at this one as a potential, kind of setup for here, only because it's hit this level so many times. It's not a big mover. I mean, you're only talking about what, 15, 16 pips. So again, in the large trade parameter setup, it's not a big one, but remember, in some of these binary positions, you don't really need big moves in them. Even in currencies, if you're position sizing and you only have very, very tiny risk, um, like this one, this zone here, you're talking about a 6 pips worth of risk. If your normal trade setup is 15 pips worth of risk or 18 pips worth of risk, this is tiny, but you can take 3 times the position size on there and have the same exact loss per trade. So it's tiny. Not everybody's into just a 14 pip mover, but understand with little risk, you can take twice the position size, and your risk comes out to be exactly the same depending on what money management methods you're using. Again, I recommend to all my students, and again, you guys can do whatever you want. It's your own trade accounts. I always recommend you have a percentage at risk of your account per trade. Then it becomes a position sizing tool that you're using. Again, if you're normally taking 15 pips risk and this is only 6, you take twice the position size. The risk at the end of the day per trade comes out to be exactly the same. So yeah, those 14 doesn't seem like a lot, but when it's worth twice as much as it normally is for your account, all things at the end become apples to apples again. All right. So just keep that on your radar. Again, this one is actually, we're going to set this one more of a break. We're not going to look for another long. It would be a break over here. I'll change this across of 8304. And again, we're set an alert right here. And whoops. It's like, don't retest. Let's see. Euro pound. Harry Potter. Right there, baby. All right. So Euro yen is the next one. So your yen had one of those ones. It was pretty deep. It already hit one time, right? It hit here and dropped. It hit here and dropped again, right? This one again, and this stayed live. It's inside of the range for the risk that we had listed. Unfortunately, this one made it. You probably would have got stopped at a break even. It made it to right there. It made it to a 1 to 2.2. So not quite the 2.5, actually 2.39. So super, super close. It came up and entered again and then went all the way down here to a 1.25 before finally coming up and breaking out the top. And you can see right now it's down at a 1.3. So it has now finally gone through the 1.3 target. Depending on what you use to trade this, whether it was something at Nadex or external, you would not, you shouldn't have lost money on this trade. It should have been a worst case scenario, a stop out at break even here or here. Actually, this wouldn't have broken you out anyway. But again, this was 12 hours, so setting and forgetting you should have been fine. But as you can see, it has now pushed back down again. The profit target on this one south is probably going to be down here at about 128.79. It's on its way. And again, that's why we try to we try to put things together. But at the same time, take something learning wise. Here's one touch, here's 2 touches, here's 3 touches. You don't expect it to hold again, and it didn't. It went all the way through, came back, and then did kind of the same thing. It violated the same zone that it used. It based it, pulled back, and gave you another entry, came in again, and is now dropping. So analysis is fine depending on your product. You whether be in, out, or probably stopped out of break even. So still think this is one good. I'd wait for a much lower before a long though. But again, I am kind of leaning more towards the euro short. Now, if we've driven all the way back down into one of these lower levels on Thursday, I do think that we look for something long off of that. That is it here? Producers right here. If we are all the way down here, right, you can see that it's red. If we are all the way down here, then look for a bounce on Thursday. Okay, that is going to be a news-based bounce. Okay, like I said, I don't have a crystal ball. I don't know if it's going to be down there, but if it is, if it pushes all the way down for Thursday, then yeah, you can go ahead. I think that'd be a pretty good long going because even though with everything they've said, if the price is driven down ahead of time, yeah, I think it's a decent long. All right, but I don't know where it's going to be in 48 hours. That's for you guys. Again, if it's sitting over here, it could still be a long opportunity. We've got to see what the price action looks like. But this short from yesterday, you should be heading down towards it should be a profit pretty soon in the next couple hours. All right. We're gonna actually turn this yellow now because it is an inactive zone for us. Let's take that off. Next one to be up top at your 71.8 or 78.6. All right, good. Euro dollar. So euro dollar also turned on us. It did this little funky little thing right here. I hate when it does this. I mean, you could have said, there's a zone right here. I mean, you could have said, hey, listen, there's sellers right there, and you're right, there were sellers there. It didn't even get to it. So it did this little hiccup at 7:30, and that's really kind of what turned us loose. Um, I have an alert right now at 113. It's a decent level. It was okay, pushed away, and then the fact that at news it spiked up just to touch that level and then collapsed. I'm marking it off. Right. So you know, looking at this one, top to bottom, I like the 1300. I like the reaction off this level. I like the fact that it pulled up. And again, that would have been my analysis no matter what for a supply zone. It went all the way down. But when we do the full draw, it also happens to be the 50% retracement level. So it's another one of those dual supply zone and 50% tool. Why I'm using supply and demand first. Some of you may say, well, wait a second, fibs is what experts use. Nah, everybody uses different things. Experts don't necessarily use fibs. But here's the thing. If I've been using fibs and following this down and following this down and following this down, right now it's not a trade setup. Right now it's not a trade setup. It's not a trade setup. It's not a trade setup. I'm already set up. It's not a trade setup. It's not a trade setup. Finally, we have a bottom, and there we go. Confirming. Finally, fibs have found that level when we had it all the way back over here. So again, I'm using it as a confirmation method to stack the odds in my favor. If you guys attended the last education summit, I did a presentation about other tools you could use to stack the odds in your favor. This is another one of them. Okay. I'm using it to stack the odds in my favor, but set your alerts at 1300. I'm sorry, 113, right? 113. And again, buying wise, I'm not really interested in buying this one until we get much, much lower. And again, euro dollar will definitely be one as well that you want to watch on Thursday. We got to get through non-farm tomorrow, the ADP non-number tomorrow. And then Thursday morning, 7:45, that's where we're talking about interest rates and the ECB saying, yeah, we're raising next time. Boom, this one goes pop. All right, so watch it. And again, you can see it. Where is it? Not there. It should be. Where is it? Yeah, right there, right there, right there. That's where your news is coming in. So we'll see where we are at that time. But I still like this 1300 up top. Pound yen. All right, so pound yen, we were talking about buys. We have one touch of this level, which again also happens to be the 50%. It's still holding. We have lower highs put in right now. It ran into sellers, and again, you could have drawn a level here and said, "Yep, there's some selling in there." Again, it was already confirmed once with a touch here, and it touched it again today at 10 o'clock. Great reversal time. It is pulling back down again. It is a valid trade that you should have been in had you watched the other session. It's already down. It's already down 33 pips. You'd be up 33 pips on this one already. The 1 to 3 is pretty decent, right? Your 1 to 3 on this one is here, and your 1 to 3 is sitting right there. That's 3.1, but close enough. Or perfect 1 to 3. So it's almost out already. So another trade setup that you guys most likely are in if you've attended some of the morning sessions. Again, this is a level we talked about yesterday. That's the top of the fib. So we're good. I think targets overall are the 154.19, and then it's also a potential bounce level. So a lot of stuff going on the pound. Thursday, I do think that the pound, again, the market's going to adjust, right? The market's going to adjust for this. But I'll tell you right now, if they don't raise, now everybody's under the assumption they are, right? So if they do raise, is it going to provide some pound strength? Yeah, probably a little bit because they are technically, it's a fundamental change in the market, right? But the market's already kind of priced it in. If they don't change, you may say, well, nothing's changed, Brian. Yes, but the market already priced the change in. That's a huge negative drop for the pound. So you see the euro pound go up and the pound yen go down. I'm pretty sure they're going to do the 25. They seem like they're pretty progressive and kind of aggressive with the way they're handling it right now. What we're looking for is really tomorrow night and European session on Thursday. We're looking for that price to tank to the downside. We can find a buying opportunity. Remember, if you want to buy something, you want to get it on sale, right? You don't want that. You don't want them to say, "Hey, we got a great deal this weekend," right? We just raised the prices 25%. Right? You could have bought it cheaper last week, but it's 25% more expensive right now. Who's buying? And the answer should be nobody. But if they say, hey, listen, we got a sale, it's 50% off. Now who's buying? You should be looking at it, right? That's what we're looking for on Thursday as far as the pound yen goes. Now, pound dollar. Pound dollar, we talked about yesterday. We were looking for a break above the 134.68. Right? We got the break. It gave us the basing, and we got the pullback. It didn't come all the way back to the level. This would have been a hard one. You may or may not have gotten entry in there. We were looking for targets up at 135.12, and we actually had an alert up there looking for it to hit. We got it through, right? It cleared. right? This morning, it literally cleared through, pulled back, and then the European session drove it right through the target. Actually gave us an entry and started to roll back on us, right? We knew we were looking for that rollback, but then at 8 o'clock this morning, when the U.S. session, came in, that's where they continued to drive it up higher, and we had the dollar weakness. So, again, remember profit target up top first, and that's what we had from yesterday. This was definitely talked about yesterday during the morning session, um, but the area we're at right now, you may say, well, how do we have an alert at that top area, right? Well, that also happens to be a 50% fib level, right? As well as an area where sellers have come in. Now, I didn't like this level as much. We've had 1, 2, and 3 touches, strong push out of it. And what we're looking to do is take advantage of this racetrack right here, right? No pullbacks, no nothing. That's why we were talking about the break, and you can see it went well above, all the way back up past the 1 to 3, and then it hit and pulled back from the 50, and is hitting again. So, may say, do we take it now? Does it meet the rules? Sort of. Do we typically take a trade on hit number 4 or hit number 5? No. Has it broken the other side of the zone yet? No. Has it pushed it pretty far? Yeah, it kind of has. Is it still fib level? Yeah, right? Have fib traders gotten to trade it yet? They've just started. So there are some positives to it. There are some negatives to it. The trade setup was really the breakthrough and taking it up to that level. And this was a decent runner, right? I mean, this was a 44 pip runner this morning, and it took what 1, 2, 3, 4 hours, 4 hours to go. So this is something you should have been looking for today. Um, if you're looking at your short, I mean, here's your long. It's so funny. It hates drawing it when it comes from the bottom. But there you go. There's your trade setup. There's your 3. You can see how fast it was. Now it's kind of done. Let's see. Let's see. We'll pull the reversal on the other side just to see how far this one needs to go. 1 to 3 is sitting right there. So it's a little bit far on the short. The reason why is because we have sellers stepping into the market right here. You have sellers stepping in right there. So do you take the reversal? Could. I don't love it as much. Yeah, we drew the long from yesterday, and I love the long. Don't love the short as much. Okay, but there it is. What are the indicators do you use for market setup? Tim, a good question. Yeah, I'm a price action trader, so I use supply and demand. I use those zones, and that's the only thing I use for indicators. You'll see that I don't have anything on here, right? I'll use things like fibs to confirm it with something like this to give it a little bit higher of a quality score for myself. I'll throw Bollinger Bands on, right? Bollinger Bands are another one that I'll look at for trends on some of the higher time frames. I'll use those in spikes as well, kind of a reversion to the mean theory. But for the most part, I am 90% supply and demand zones, and that's basically what I mean by that is understanding how to read price action to see where buyers and sellers were in the past. So hopefully that answers your question. Dollar CAD. So dollar CAD, we tickled the area up top at 127.97. If you guys were here last week, we pointed that out. Last Tuesday we talked. Actually, I guess not last Tuesday. 2 Tuesdays ago, actually, we've had this level since January 6th. Okay, so it's been there for a while. We've mentioned it. We took the bounce off of it. We've continued to push down. We're kind of in the middle of the range right now. So there's a small trade set up here. Whoops, it like jumped on me. There's a small trade setup right here. You can see there's a bit of, again, a Harry Potter momentum, continuation based trade. It's in here. Do I love it? I, I would say this is probably a B plus maybe. The 1 to 3 brings us right to here. It is a little bit deep, right? You can see the bottom. It is a little tiny bit deep. But what I like about this trade is that's 3.2. So actually 1 to 3 is right there. I would like it if it's just a little bit higher. It's a little deep, but with oil prices the way that they are, with OPEC Plus talking, with Russia's way to kind of, everybody's ganging up against Russia. The easy way for Russia to gang up on everybody else is to be like, well, fine, we should definitely not produce more oil. The world should pay $100 a barrel so we can get rich. One of those things. I feel like CAD strength is coming in. I feel like some of the talks we've heard, I feel that the CAD date on Friday is not going to be as negative. So again, if you can kind of, if you guys are looking for something, to play with oil but not play it in oil, right? It's kind of like, oh, how do you trade oil with, tell me you trade oil without telling me you trade oil, right? You guys see those all over the place. That would be the dollar CAD. I feel like this one comes back down again. And this one is kind of set up. looking to go short. Would I put it on my like top 10 radar list right now of trades that I have that my watch list? Not so much. Not so much. Do you always trade from the 30-minute chart? Ilana, great question. I do most of my analysis on a 30-minute chart. The reason why is because I use multiple time frame analysis. So I don't have time to literally run through everything that I do if I'm doing analysis, but I start my analysis on the 4 hour and use that for trend analysis, and then drop into my 30s to look for entries. And then I'll drop it down to a 15 or a 5. Now, does that mean it's right for everybody? Absolutely no. Okay. I've been doing this for a long time. I can look at this 30-minute chart and look at one of these candles and have a good idea of what every single one of the 5-minute candles look like. If you aren't experienced enough that you can look at a candle and say, okay, look, I can see how that's formed. I can tell you what the 5-minute candles look like. You can't do the same thing that I'm doing, right? And it's just because I've been looking at charts for a long time. The more chart time you put in, you'll be able to look at a 30-minute and know what all the 5-minute candles look like. And the reason why is because, in this time frame, you can say, well, wait a second. Here, I'll drop it down. If you're looking at a 5 for entry, you can say, well, wait a second, I can only see this much data, right? I can only, the chart only holds this much. But on a 30-minute chart, that's a very minor piece for me. Do you see how much more data that I can see on a 30-minute chart? That's why I do my analysis, okay? The only time I drop below it is if I'm looking for, and we've shared this on the channel, right? For things like news, we'll do the 35 and 1. It's the only time I'll ever go down to a 1 minute is if I'm using it to trade a news release, right? A pre news release. That's it. But I used to, I don't even really go to 5s anymore. I'll only go to 5s to look for some basing and some of those news trade setups. That's it. Everything else I do is off a 30-minute. So that is it. Dollar Swiss. So dollar Swiss yesterday morning, we talked about a breakthrough of 92.92. As you can see, we got it. We did get the base. This one didn't give us a pullback, but typically when you get that base inside of a zone, you're looking for the breakout, and it did. It broke out. It went straight down. It knew that we had a 1 to 3 target right here because it literally went right past it. Said you got your trade. Okay, good. And then profit taking him and pulled back, and then again continue to drive through. We had another zone here. We weren't really interested in taking it long from there. You can see it came in here and it based, and yeah. As soon as it based, it's like, oh, another Harry Potter, two in one trade in one window. It's kind of how that's kind of how it's set up when we were talking about price coming down to 91.70. Um, Kind of the same play. If you're not already in this one, it's already a little bit late in there. You actually may have already captured some profit on there. It turned where it should have, but again, this is the dollar play. Again, Swiss play. Swiss isn't necessarily going to be affected as much by what's going on in Europe, but yeah. I mean, if you were here yesterday, you've got this one, and again, there's another one, but such low movement today. I mean, it's down decent in 24 hours. In 24 hours, it's down 80, but most of that occurred yesterday, and then today you can see really from the 3 o'clock candle is here. Here's where the official currency day started here, and we're right there. So most of this movement occurred from this time yesterday, right? From here, that's where most of the movement came in, is in the 24 hours. So that was yesterday. This is what we've dealt with thus far today in the new day of currencies. So a little bit misleading, that 24-hour pip change. Really from, what is it? I mean, let's see. From European Open, when the true day started, 16 pips. So it slowed down a little bit. That's why I said yesterday was really the call where you should have been. Dollar yen also in the same scenario. We talked about a Harry Potter trade here yesterday. Again, a lot of these trades yesterday. We talked about a break of 115. How do we find this one? The huge rally up in price, and this one was flawless. You could have grabbed it on the way in or waited for the retracement. There was your base. There was your pullback. You can see where the entry came in. All right. You can see where the entry came back in again. Never broke through the top, and not only broke through, came much, much deeper. And what did it bounce off of? The 50, right? Came right off the 50. Your target, again, we talked about this yesterday too. Your target should have been right here where the buyers came in at the start of the racetrack. It went a little bit lower and grabbed the buyers at the 50. But again, it's always target first, not reversal. You can see all those people that got long are like, wait a second, hold on, the 50's right there. It hit. Oh God, I'm losing all my money on this one, right? So again, that was a trade setup from yesterday. I would say if this gets a little bit lower, little bit more challenging. There is areas of buyers below. It is sitting right behind the 50. But you could make a case in saying, well, wait a second, there's guys sitting right there. There's somebody that bought it right there, and that's right at the 50, Brian. And you're right. That is what happened. But remember, I'm not a reverse trade person. What I mean by that is a lot of brokerage firms love when they make money when you trade. They'll have a reverse button where you're like, oh, price is here, I'm short. Bam, hit this reverse button, sell my position and get me long. I'm not one of those people. I want to clear my plate, before I get the next serving. Um, it's how mom taught me to do it, right? We don't have our main course and then throw dessert on top of it. Um, you know, you can have a dirty plate. That's totally fine, right? But for me, I cycle one trade off and then look at the next one. I'm never hitting that reverse button. So for me, I'm looking for some basing down here, some type of a confirmation. I like the price a little bit lower, but we were already short the position. I want to get out of the trade first before I jump into another one. Keep it simple. So right now, I'd kind of watch out for that level. I do think that this one is going to have some. I think it's gonna challenge this 50%, right? Only because the levels behind it. I think the 61.8 is another area where people are stepping in. Um, the dollar yen is very hard to play right now because technically everything that will strengthen the dollar will also help strengthen the yen a bit. So it's kind of a little bit more difficult to play. There are cleaner trades, right? If you're looking to play the dollar, go to the euro dollar, pound dollar, Aussie dollar, dollar Swiss, dollar CAD. If you're looking for weakness, the same thing. The reason why this one is more difficult is because the yen is a proxy for the overall stock market. And again, as that gets flux, as that moves around based off of, my God, this data is great. It has, there's a little bit of conflict in there. All right, for lack of a better word. Um, let's go over and kind of again, we're just scrolling through things here. This is currencies again, cryptos. Again, I think there's a decent short opportunity if price is able to come back down to 38,000. I know some of you trade them. Just watch out for it. It's a level that was seller, seller, seller. Hit number 4 is what broke it, and then boom, 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 we broke. But again, it had one more seller, so I think there's an opportunity there. Russia is one to watch out for. If Russia says that's fine, sanction is up, baby, we're using cryptos to go around it. That's very bad for the cryptos in general. They'll become again standardized by the governments and regulated, and all these will be outlawed if people are going to use them to circumvent things. Um, TLT bond wise also pulling back again. It has 3 top and dropped, so that's good. Let's go across the commodities. Oil right now is really just trending back and forth, and you can see oil is nothing but a trap today. There's your European session. At the open, what did they do? They shot the price down and said, oh, we're going low today. Okay, everybody sell oil. And what did they do? It went up, right? And then when it broke out of the top side at 88.50, what do they do? Oh, we're breaking through the top, support and resistance traders, go long. And now they're stopped out again. But really, there's no movement. Here's there is your oil play for the day, right? We opened here and we're right here right now. European session opened here. Look at this. European session open, current price. Totally flat, right? There's where the European session closed, right there at 8:30. And then again, US session opened and we're sitting right there. So we're still within kind of the same range. OPEC Plus is a big deal. When they make comments tomorrow, we're going to get more of a play on this one. Again, 35 and 1 is how you watch this one. Don't forget, later on today, the API oil inventory report. It's an industry specific report comes out. Um, OPEC Plus headlines will trump the API report, but it may give us a little bit of a headline and give us a somewhat of an idea of what we should be doing for tomorrow morning. Natural gas coming in. Natural gas pulling back. Again, you can see it chopped through. We had this one trade set up yesterday, right? It literally came down and filled that gap and then kind of bounced off of it again here and then went higher and then hit it again and then hit it again. Like it's still messing with this level. I don't really like a lot of longs on this one until $4.40. It's you got this in there now. Arguably you could say, well, wait a second, it's even worse than that, right? It's kind of pulling over. If you really want to get fancy and make this look really really good, we can do like a whoops. We can do this, and then we can pull it down, right? We can say, well, wait a second, look, we're staying in that same channel. A little bit of slice through, but you can see this touches and touches and touches. So natural gas is pulling back. This week is supposed to get a little bit warmer, so that is obviously helpful for natural gas. Um, the other thing about natural gas too, it does have some exposure to the Ukraine situation. Russia supplies a lot of natural gas to the European Union and European countries. If they put sanctions on there and says we're not buying your natural gas anymore, that's obviously going to move this one around a little bit. Um, Russia and the United States are the 2 big producers of natural gas. I mean, we'll gladly sell it to them, which again, that would be more demand. That could probably that could send this thing even higher. But again, with the temperatures the way they are, natural gas. I'm telling you, natural gas has been the wild west. It is down 2.65 right now. It was up 12% the other day. Again, if you are not accustomed to this market, this is not a beginner market that has huge swings back and forth. So be careful with it. Gold. Gold is playing with 1800. Look at this. We just talked about it basing through 1800. It pierced through slightly and kind of grabbed the level on the other side. Look at all that basing right there. That's what it grabbed to punch up. Gold is whoops. Gold is in a very hard spot right now, right? Um, there is inflation. Everybody's talking about it, but we're at the stage now where it is time to crush inflation. Typically not good for gold. So yeah, we'll see. I mean, you know, the Fed president's going back and forth and saying, I stand behind 0.25%. Yes, we all know that. That's what's already going to happen. But some people saying that they stand behind a zero point 0.5, not necessarily the most positive thing. Silver was actually up earlier today, like 2%. Now it's only up 0.6. So you can see that they're really trying to keep me around those big, strong basing levels. 1800 is exactly where, talk about psychology in the market, right? 4,500 psychological level, right? Got a 45 and double zero in ES. NQ within striking distance of 15,000. YM, we're at 35,003. Russell's a little bit off. Again, it's at 2,034, and then gold is at 1,800. But look, right around 1,800. I mean, they're all at huge psychological levels right now. Everybody's waiting to figure out what's going to happen. And again, rising interest rates is it's what it's all about. But that's why I think gold is one to watch out for, particularly this. This will probably be tradable later this week. But again, we don't have an interest rate. We're not looking at this week. It's coming up soon though. But watch the ADP headlines. And then silver, you can see. Look at this. We were up like 12%, or it was like it was a lot. We were up a lot earlier today. U.S. session open, boom, we drove right back down, and now we're up 0.7. So it's I'm sorry, not 12, 2.5% in this one, right? All we're doing is we're pulling back down to basing levels. If we have more destruction, I think watch the 22 level in silver. That's an area where it tends to pull back to. We'll see. I don't know. Right now, gold, oil, and gold, I think are two pretty decent markets to trade. Natural gas, crazy. Silver, crazy. A lot of volatility back and forth in those. When we're talking about finding the best opportunity, I think right now what exists, the things that are they're sticking out to me right now on the market, definitely the indices. I mean, the major ones being high like this, they got some room to run. I think these are great setups right now for the later on this week. Again, we're taking it over here in ES. NQ is about halfway through, but it's running into a level, and I think it has the ability to punch higher if it can get any help, right? YM also at a level where we have some rallying to the top side, and then Russell kind of the same thing. They're all kind of, I think indices are great trade setups this week. Again, set your alerts on those. I think everything with the euro and the dollar and the pound this week are great news wise. Like I said, tomorrow great data. I think basically really from 7 o'clock to 7:45, everything in the euro and the pound are going to give great opportunities this week. And then Friday with non-farm, again, even more out there. So I love this. The U.S. warns latest jobs data will be ugly due to Omicron. So I wish the White House would stay out of this stuff. Let the Fed handle the economy. The White House has no business doing it. Look, they overstated the number of unemployed people last month. It's because the number of unemployed people is false. Okay. Again, the data is incorrect for the unemployment rate, but at least they're acknowledging that, hey, listen, the data was overstated. I'm glad that they did. I'm glad that they mentioned that, but they're going to claim that the unemployment rate is where it is right now because of because of their policies. It's just the way that the data is figured is why it's wrong, right? So we'll see what Thursday looks like. I think Thursday is going to be a big one. But if the White House has warned us already, we'll see. I mean, the forecast right now is that unemployment claims are going down from where they were last week, but they're apologizing that the data is wrong. We'll see. We'll see. So, like I said, a lot of fireworks this week. I think there's going to be a lot going there. Actually, I need to change this slide. You guys can see.